So we're halfway through the month of January and rates are still way above 7%. 7.25, I believe, is where we're at. And in all likelihood, we're not going to see a massive rate drop for a while. We've got the CPI report just came out showing inflation is sort of holding where it is. It changed a little bit. Jobs report that just came out was interesting. Inflation is a concern and the economy is doing okay based on these reports. So we might not see any type of mortgage rate adjustment. Now, what I want to talk about today is super important because we're all probably have heard tons of stories about these fires and insurance. So if you are planning to buy a home, there are protections for you as a buyer within these contracts. And if you're interviewing your agent that's going to help you purchase your next house, make sure that you talk to them about your contingencies. And most likely they will say, oh, you got a loan contingency and an inspection contingency and an appraisal contingency. And that's about all they talk about. Those are the three big ones. However, that inspection contingency or investigation of property has evolved into essentially multiple contingencies split apart. It used to just be an investigation contingency. And if you waived it, you waived all your rights to investigate the property, both the physical property, having an inspector come in, and your documents, all of it. That was changed in some of the more recent updates to the RPA. And now you have, I believe, 9 different contingencies. You do have the loan, you do have the appraisal, you do have the preliminary title report. You have a separate one for common interest disclosures, which is essentially like HOA type documents. You have contingency about leased or liened items, which would potentially be a solar panel type of situation. Could be something different, but solar panel is probably the most common. And then you have a contingency for yourself if you are writing a contingent offer because you need to sell your house. But there's one more that is probably right now the most important, and that's an insurance contingency, which didn't exist on its own until this most recent RPA. And it's very important because we don't know what these insurance companies are doing. The big three have pulled out and aren't writing policies. We are hearing that the insurance branch of our California government has made inroads to bringing a lot of opportunities back, essentially giving us more options for who we choose to purchase our insurance from. Ultimately, insurance is going up. And while it's always been part of the mortgage calculations, your mortgage payment, all that is incorporated into your qualification if you are purchasing with a loan. Whether you're going to manage your insurance and property taxes on your own or not, it's still calculated to qualify. But it's never been a standalone item like it is now, as you can see. So the standard for California is you have 17 days to find home insurance that is acceptable to you and meets the pricing that allows you to qualify for your mortgage and purchase this house. Now, you have about 2.5 weeks from the time your offer is accepted to figure out if you can get home insurance for the property that is in an amount that you can stomach and pay annually, as well as it's enough coverage in case something horrible happens. Based on these fires that are happening and everything that you're probably hearing, while going with the absolute lowest required insurance is often what we do or what we want to do, you want to dive into that and make sure that you are getting the insurance coverage that you need and that will protect you. You want replacement value so your property is taken care of. When you are choosing your insurance company and the policy, there's 4 or 5 different buckets of different levels of coverage, and each of those together will create your annual premium based on the coverage that you want. You want to look at all of those buckets and ensure that each one is set to an amount that makes sense for your situation and what might happen in the future. Frankly, if you are buying here in San Diego in East County, there's a high chance that you're going to have a very hard time finding fire insurance, especially in the next few months, probably for the rest of the year. And the California Fair Plan, from what I'm hearing, and I have not checked, and I don't actually know how to check, but I'm being told that the funds for the fair housing insurance are depleted to next to nothing based on what's happening in LA. It's quite possible. It absolutely makes sense. The Fair Plan was a backup. It wasn't meant to be a full insurance policy. It was a Band-Aid to help homeowners in high fire areas. And because of what's happened over the last week, that specific insurance is being drained rapidly. So you do have this insurance contingency, and it means if you can't get insurance that is acceptable to you and fits in your qualifying financial budget, you can walk away from this purchase and you can get your deposit money back. Now, my suggestion, and this is what I tell all my buyers, whether I'm doing the loan for them or also helping them purchase their house as their agent, is pick a house that is in the general size and in area that you want to look at, that you are serious about buying in, and start getting quotes. You've got to do the work. And this is something that you want to do yourself. I'm not going to do it. I'm not going to be responsible for that. If you talk to other real estate agents or lenders, they should also be pushing back on you to do this yourself. It is extremely important. It's something that you want to be the person making all those decisions, accepting the coverage, the amounts of coverage, accepting the cost that you're going to pay, choosing the company that you work with, deciding if you like their insurance, if the customer service makes sense. You want to be the person that is handling that. And you want to get that file and all that information to your lender as quick as possible so they can process that paperwork and add it into the loan documents and start calculating your monthly mortgage payment and how it's going to affect your DTI to ensure that the numbers that you've chosen will allow you to qualify for the loan that you're going for. If you have more questions about insurance, contingencies, or getting pre-approved for your next purchase, if you want a realtor that works specifically in San Diego and East County to represent you, please reach out to me. I'd love to talk to you.